Alright, for this video I want to go through the IRS Form 8936 for the Clean Vehicle Tax Credit. So this is a similar credit that existed last year. It's the same form number, but they have changed the name from the Qualified Plug-in Electric Vehicle to the Clean Vehicle Credit. So we'll go through the full 8936 here. We've also got the Schedule A for the 8936 where we report the information on the vehicle itself. And this is complete with the full 1040. So we'll look at the Form 8936 and then how everything kind of blends together on the 1040 itself. We've also got two websites up here. So we've got the IRS website on the Clean Vehicle Credit for 2023. So some good information here. And we've also got the fueleconomy.gov website, which is also helpful to look up how much credit you can claim based on the vehicle that you purchase. And then lastly, we've got just one slide covering some background on the credit and then some more details on the fact pattern itself. So if we start with the slide here, cover what is the new Clean Vehicle Credit. So these are for new electric vehicles, 4 wheels, placed into service after 2022. So this is 2023 going forward. And they operate using an electric motor that draws power from a battery, which has at least 7 kilowatt hours. The vehicle is manufactured primarily for use on public streets. Its weight is under 14,000 pounds. Final assembly of the vehicle has to be done in North America. And when we look at the price, it's under $55,000, or you get an $80,000 price or less for vans, SUVs, or pickup trucks. Now, more details on how much of a credit you can claim can be found on the IRS website and the fueleconomy.gov website. So the website for the IRS talks about who qualifies, and it talks about the credit amounts depending on when the vehicle was placed into service. So, for example, if you bought and placed into service a vehicle in January through April 17th, 2023, you're looking at a $2,500 base amount plus $417 for each kilowatt over the 5, right? And so up to a $7,500 maximum. Different standards, but similar, apply for vehicles bought after April 18th through the end of the year. Right, and now also they've got some more details on what is a qualified vehicle. Your dealer should be providing you a lot of this information. And then ultimately you can check the fueleconomy.gov website, which is very helpful because this provides a tool for you to actually look up the make, model, and year of the vehicle when you bought it and placed it into service, and then it gives you the details on the credit amount. So in our fact pattern, our taxpayers bought a 2023 Chevy Bolt, so they're going to be eligible for a credit up to $7,500. Now, some other details on basis and business use here. So if you do claim this credit, the amount of credit that you get, you have to reduce your basis in the property. So in other words, if you bought a vehicle from the dealer for $40,000, and you were able to claim a $6,000 credit, you have to reduce your cost basis from $40,000 down to $34,000, right? And that's important because if you sell the vehicle at a later date, you need to account for that reduced basis. Now, if you have a vehicle that's for both business and personal use, those credits are separated, right? So the credit was separated into a personal component reported on the 8936, and the business use credit is calculated on the 8936, but then it's transferred over to the Form 3800 as a general business credit. Now, when credits expire, personal use credits, so if you can't use all of it in the current period, there's no carryover, no carryback, it's done. However, with the business use credit portion, there is some carryover, right? Now, there is an election, well, not really an election, but you just kind of enter the information on the form where you can use your 2022 income as the AGI ceiling instead of your 2023 income. Now, this is important because if your income is too high, you're not eligible for the tax credit. So the form will let you use the lesser of the two amounts, which will make it more, it'll make it more eligible for you in order to be able to qualify for the credit, because you have two different levels of income that you can use to measure it. And so we'll see that directly on part 1 of the form. All right, so let's look at the fact pattern here. So we've got John and Jane taxpayer. They're married. They're filing a joint return. And in July 2023, they bought a brand new 2023 Chevy Bolt, which qualifies for that $7,500 clean vehicle credit. Now, their total taxable income for 2023 is going to be $71,253. And their tax liability is $7,915. Now, the EV credit here is a non-refundable credit. So you can reduce your taxes dollar for dollar up to the balance when you get to zero. And then after that, anything else is lost, right? It's non-refundable. In this case, their tax exceeds the credit amount. So we're going to be able to use the full amount of the credit. All right, so let's have a look at the return and start trying to make sense of some of these numbers here. So the 8936, we want to do part 1, and then we'll look at Schedule A. So part 1 is where we report our modified AGI. This is important because if our AGI is too high, we don't qualify for the credit. So in part 1, line 1A, we have from line 11, our adjusted gross income this year is $98,953. So if we're looking at our 1040, line 11 here, we have AGI $98,953, and so that's reported on 1A. Lines 3A, we report the line 11 amount from our 2022 return. So we go back to our 2022 tax return, and we see our AGI is $92,360, and then on line 5, we enter the smaller of the two numbers, right? The smaller of the two numbers is going to help us, because if our income is lower, we're generally have a greater chance of being able to claim this tax credit. All right, so notice here on part 3, it says we can't claim this credit if part 1, line 5 is more than $150K or $300,000 for married filing joint. So it's really important to take a close look at these and see, well, if our 2023 income was, let's say, $160K, but our 2022 was $92,000, we would use the 92 and we would be eligible for the credit this year. All right, so part 2, credit for business or investment use, and then part 3 is the personal use. So if we have a look at Schedule A first, this is where we input information on the vehicle itself and calculate the credit amount for both business and personal use where applicable. So we've got the year, the make, and the model of the vehicle. The VIN number for the vehicle has to be entered, and then the date the vehicle was placed into service. So this is the date that you actually took custody of the vehicle and started using it. Now, question 4, was the vehicle used primarily outside the U.S.? No, we were using it in the U.S. Does the VIN belong to a new, clean vehicle placed in service during the year? Yes, so we can go on to part 2. Now, part 2, we need to figure out if any of the use is business use related, right? So did we acquire the vehicle for use or to lease to others and not for resale? You would answer no if you are leasing this from another person. Well, we purchased this vehicle, we're not leasing it, so we'll go ahead and answer yes. And the tentative credit amount was $7,500 per the details that not only the dealer provided us, but what we found on the government website. So we looked up the credit based on type of vehicle, year, and then the date it was placed into service. So after April 18th and before January 1st, 2024. All right, so we got the $7,500 figure there. Then on line 10, what is our business or investment use percentage? In our case, it's 0, right? This is purely a personal use vehicle. So line 11 asks us to multiply line 9 by line 10, which gives us 0. All right, so include this amount on line 6 in part 2 of the 8936. Well, Part 2 of the 8936 is the credit for business or investment use. That's just going to be 0, right? So we have no business or investment use of the credit. Now, line 11 also says that if you entered 100 on line 10, you would stop. Otherwise, go to part 3. Right, and that's because if you used it for 100% business use, well, there's no personal use component left. But in our case, we had 0 business use, so it's all going to be personal. So subtract line 11 from line 9 in part 2, and then report the amount on line 12. Now, include this credit amount on line 9 in part 3 of the 8936. So if I go back to part 3, line 9, enter the total from part 3, Schedule A's. There's our $7,500 figure. Now we have to figure out how much tax do we actually owe during the year based on our income. So line 10 asks us to enter the amount from Form 1040, line 18. So if I go page 2 of the 1040, line 18 is $7,915. So I put $7,915. We don't have any other personal credits on line 11. So we subtract line 11 from 10. If 0 or less, enter 0 and stop here. We can't claim the personal use part of the credit. So the personal use part of the credit, because we have an amount greater than 0, is the smaller of line 9 or line 12. So the smaller amount on line 9 versus 12 is going to be the $7,500. So this is the non-refundable tax limitation, right? So if our tax liability was less than $7,500, we would only be able to claim up to that balance, right? We can't claim more than that. In our case, the taxes that we owed are greater than the tax credit, so we're going to be able to claim the full amount of the credit. So we have this amount entered on Schedule 3 in line 6F. So I go to Schedule 3 for additional credits and payments, scroll down to 6F, and we enter the clean vehicle credit of $7,500. Now, once all of that is settled, so we don't have to complete the rest of the form, parts 4 and 5 don't apply to us. The $7,500 credit flows through into line 20, so we report that reduction there. And then this taxpayer also had a child tax credit coming through as well. So the end of the balance for total taxes owed for this taxpayer is $0, and that's because they had a full amount of the clean vehicle credit. They've also had a child tax credit, so they've been able to reduce their taxes down to 0 for 2023. All right, so that covers it for this tutorial. I hope that was helpful. Any questions, feel free to leave a comment below. I do try to get to as many of those as I can, and I look forward to seeing you on the next video. Thank you.